Hey tech enthusiasts, welcome back to the channel. Are you ready for a reality check? We've been hearing about the AI revolution, but what happens when the infrastructure crumbles under the weight of its own success? Amazon and Microsoft, the giants of cloud computing, are telling us they can't keep up with the insane demand for AI. Is this just a temporary hiccup or the beginning of a major tech crisis? Buckle up, because we're diving deep into the potential fallout. This is a bigger deal than you might think, affecting everything from your favorite apps to the global economy. Are we heading for an AI bottleneck? Let's find out. All right, let's get straight to the point. Amazon and Microsoft have both issued warnings about their ability to meet the skyrocketing demand for AI services on their cloud platforms, AWS and Azure. Amazon's AWS growth didn't accelerate as expected, staying flat compared to the previous quarter. Microsoft is facing slowdown in cloud sales as well. This isn't just about a few slow servers. We're talking about fundamental limitations in data center capacity, chip availability, and even power supply. Amazon is throwing $100 billion into data centers and chips this year alone, but even that might not be enough. Analysts are already adjusting their forecasts, and investors are getting nervous. What does this mean for the rest of us? That's what we're here to explore. Okay, let's break down the immediate consequences. First, expect slower growth for AWS and Azure. Think about it. If they can't provide the resources, they can't onboard new customers or expand existing services. Second, massive capital expenditures. That $100 billion Amazon is spending, that's going to eat into profits. Third, potential revenue shortfalls. Amazon's already hinted at this in their Q1 guidance. Fourth, stock price volatility. We saw Amazon's shares dip after the announcement, and that's a sign of investor unease. Finally, and perhaps most critically, hardware and power constraints. They need more chips, and they need more electricity to power these data centers. These issues are expected to ease in the latter half of 2025, a year and a half of limitations. That is a long time in tech. This isn't just a speed bump, it's a potential roadblock. Are your projects impacted? Probably. But the impact doesn't stop there. This situation creates a ripple effect throughout the entire tech industry. First, increased demand for data center resources across the board. This means higher costs and longer lead times for everyone. Second, chip manufacturers like NVIDIA and AMD are going to be swimming in orders, potentially leading to higher prices and even longer wait times. Third, power companies will be in high demand, especially those with the capacity to supply massive data centers. Fourth, this creates an opportunity for smaller cloud providers or specialized AI cloud providers to swoop in and grab market share. Fifth, AI startups and businesses relying on AWS and Azure might face higher costs and limitations on the scale of their projects. This could stifle innovation. And finally, the data center construction industry is about to boom. This scarcity drives the price up for everyone. Now, let's zoom out and look at the bigger picture. The AI capacity crunch has significant socio-economic implications. First, a potential slowdown in AI innovation. If access to cloud resources is limited, it could hamper the overall pace of AI development. Second, regional development. Areas with ample power and suitable locations for data centers could experience economic growth, while others are left behind. Third, increased energy consumption and environmental concerns. This massive expansion of data centers is going to put a strain on our energy resources and raise serious environmental questions. Fourth, shifting business strategies. Companies might need to rethink their AI strategies, potentially shifting to on-premise solutions or exploring alternative cloud providers. Fifth, job creation and a widening skills gap. The AI boom will create new jobs, but it will also require significant investment in education and training. And finally, geopolitical implications. The control and availability of AI infrastructure could become a strategic asset, leading to geopolitical competition. Think about it. Who controls the AI, controls the future. Let's talk about chips for a second. The article mentions constraints on both third-party chips and Amazon's own chip designs. This highlights the crucial role of chip manufacturing in the AI race. Companies like NVIDIA and AMD are in a prime position to benefit, but it also underscores the importance of companies like Amazon developing their own silicon. This is a strategic imperative, not just a cost-saving measure. It's about control and independence. The more companies rely on third-party chips, the more vulnerable they are to supply chain disruptions and geopolitical pressures. This chip shortage is not a short-term issue, it is a fundamental shift in the balance of power in the tech industry. The AI race is a chip race, and it's only going to intensify. Okay, let's get real about the risks. From a technical standpoint, the The biggest risk is simply the inability to meet demand. This can lead to service degradation, missed opportunities, and delays in bringing new data centers online. Supply chain vulnerabilities are a major concern. Reliance on third-party chip manufacturers creates a huge risk of disruption. Power capacity is another bottleneck. Data centers are energy-hungry beasts, and insufficient power can delay deployments or limit the scale of existing facilities. And finally, technological obsolescence. The rapid pace of AI hardware development means that companies need to constantly upgrade and reinvest to stay competitive. Are you ready to keep up? The pace of change is relentless. From a business perspective, there are several key risks to consider. First, competitive disadvantage. If Amazon and Microsoft can't meet customer demand, users will turn to competitors. This could erode their market share. Second, increased capital expenditures and reduced profit margins. Investing billions in infrastructure will put pressure on profits. Third, financial performance and investor confidence. Failure to meet expectations could negatively impact stock prices. Fourth, unpredictable growth. The CEO's warning about lumpy growth suggests that revenue expansion may not be consistent. Fifth, dependency on AI for growth. Amazon's reliance on AI makes them vulnerable if the AI market slows down. And finally, concerns about AWS growth constraints are overshadowing the strong performance of their e-commerce business. They need to balance their priorities. Finally, let's talk about the ethical risks. The massive expansion of data centers raises serious environmental concerns. Increased power demand strain resources and could lead to reliance on non-renewable energy. There are also concerns about bias and fairness in AI systems. As Amazon becomes an AI supermarket, they need to ensure that their models are fair and unbiased. Job displacement is another ethical concern. The widespread adoption of AI could lead to job losses. Data privacy and security are paramount. Amazon needs to protect sensitive user data. And finally, transparency and explainability. AI models need to be understandable, allowing users to trust their outputs. These aren't just abstract concerns. They have real-world consequences. So, what does all this mean for the future? The AI capacity crunch is a real challenge, but it's also an opportunity. Companies need to invest in infrastructure, diversify their supply chains, prioritize energy efficiency, and address the ethical implications of AI. This isn't just a problem for Amazon and Microsoft. It's a problem for the entire tech industry. The companies that can successfully navigate these challenges will be the leaders of the AI revolution. The future is not predetermined. It is being built right now, and every decision matters. What are your thoughts? Let me know in the comments below. In summary, the AI boom is putting unprecedented strain on cloud infrastructure. Amazon and Microsoft are struggling to keep up, and this has far-reaching consequences for businesses, investors, and society as a whole. The need for more infrastructure, more efficient chips, and sustainable energy solutions is more critical than ever. This is a wake-up call. It's time to rethink our AI strategies, invest in the future, and address the ethical and societal implications of this transformative technology. Don't wait for the crisis to hit. Start planning now. Thanks for watching, and don't forget to subscribe for more insights into the world of AI. What do you think the future holds? Let me know in the comments below. And remember, the future is now.